Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. We've had some very important developments in the markets in the recent couple of days. So in this video, I'm going to cover whether you should be worried about a potential market reversal with this big ugly red candle right here, or if this is just another shakeout of weak hands for another leg up. Now, first thing to say is that we broke out of this small trading range that we were talking about for a few days. We broke out, filled the gap right here, hit that support level, hit that high right here, and then failed and came back down to the bottom of this small trading range. This by itself, this red candle by itself, is called a gap and crap. It's by itself. It is a bearish development. Now, so far on today, we are green and we are still above this trading range right here that we were talking about for a while. So far it could develop into something a little bit more worrying for the markets, but so far it is not extremely worrying, at least not on the S&P 500. There are some bigger signals on the tech stocks that could indicate some weakness in tech, which is worrying for the markets because tech has been pulling the markets up for the majority of this rally. Now, there is something new on this chart, a line that you probably didn't notice. This move up to hit this high here put in some divergences. We have a high right here and another high right here. It is an equal high, so it does put in divergences. You have the MACD going down right here and the RSI going down as well right here. So that means that this move up right here, this move is weak, and it doesn't have much momentum, at least for now. And you can see it on the MACD. If we zoom in right here, we had a bullish crossover, and right now we're about to make a bearish crossover. So very weak move right here. And this is a scenario that we've talked about many times. Seeing divergence on the daily chart is something very important and definitely something to watch on the daily chart. If we go back for the past 2 years here, all the major tops of the stock market have been accompanied with divergences. You can see here a higher high, very similar, with the MACD making a lower high. Same thing here, a higher high with the MACD and RSI making a lower high right here. Same thing here and same thing here. Now, make sure to hit that like button if you enjoy. It helps out the channel massively. And also don't hesitate to drop a comment. I do read all the comments. I really like the support you guys have been giving us recently. And also don't hesitate to give us your thoughts on the markets or certain stocks. Now, that does not mean that this is 100% likely to play out. And you can see, I'm going to take this as an example, this moment. We were trading here on this channel. I think I was making videos back here. We started seeing divergence here. You can see the price made a higher high here and the MACD made a lower high right here. But if you went short on this low here, you would have lost money. You would have got stopped out over here. These divergences can extend, and that's exactly what happened here. They extended for a full month trading above this trend line to extend these divergences, and then they played out for a correction here. And that's the importance of having a sell signal. You have this trend line that indicates the trend, and once the trend is broken, you get that sell signal and you trade the move down. And so comparing that to what's happening right now, I'm going to clear these lines. That would mean that this divergence could potentially extend very high. You can see this is a very steep trend, and we could really burn through these divergences, create more. Until this trend is broken, you don't really have a sell signal. And so that's what I'd be waiting for, is a break of this 3130 point level. I'm going to put it on the screen right here. This level right here, 3130, is a very significant level. It coincides with this trend line, and a break of that could lead to some downside, at least to this zone right here. But once we get there, we've got a lot of support, so be careful again. We've got the 200-day moving average, the 200 exponential moving average, the 50-day moving average right here, all coinciding into the zone. And then we have the top of this trading range here, which acted as resistance here, and then we broke out here. This is a very important support level. So if we start to see more downside through this level, this is a buy zone. This is where you could potentially buy the S&P 500 at a discount fairly safely with a lot of support for a nice little bounce, potentially to take out these highs. Now, of course, if we start breaking down below the 3,000 point level, that becomes worrying. So if you're bullish, you need to put a stop loss right below that 3,000 point level. And if you're bearish, you can use that 3,000 point level as a sell signal for a move down to the 2,800 point level right here. That would be the next target for a move down. And that's why I'm watching this 3,000 point level very carefully, because if that gives in, that's a lot of selling pressure to the downside for a move down here. So obviously all of these levels depend on how actively you trade. If you're just looking for a long-term position, holding it out for 2 to 3 weeks, you're obviously not going to be trading that short leg down all the way to this zone. You're going to want to be buying above that support or selling below that support. Now we're going to take a look at two specific sectors that are very important to look at, especially this week. We're going to take a look at the banking sector and the tech sector, which had a huge red candle the other day. So let's first take a look at the banking sector with XLF. A lot of banks are reporting this week. We had a couple banks report today. A lot of bad numbers were expected by the banks, and so far this week they're holding up pretty well. They had this downtrend line here, divergences building throughout the past couple of weeks, and so far they broke out. We had a bullish crossover on the MACD, so all of that is bullish, and it's holding up pretty well compared to the S&P 500. It had a significant top right here, and it's been underperforming in the past couple of weeks. But that's often what you see in earnings seasons. You're going to see the stocks already pricing in the expected earnings before the actual earnings. And when you get that actual earnings report, you're not going to see very sudden moves. I know we had Wells Fargo report today with $2.4 billion loss. It gapped down significantly at the open, almost a 6% gap down. And that really is not surprising. Wells Fargo has a lot of bad loans, a lot of personal loans. And so with the shutdown, people not being able to pay back their debt, Wells Fargo is obviously going to be running at a deficit. Now we can take a look at the Nasdaq 100. This is the Nasdaq with the March lows here. You can see the impressive rally that the tech stocks have been on for the past few months. They got to all-time highs very quickly, and they've been powering on through ever since then. But the main development we have here is this big red bearish engulfing candle. That's about as ugly as it gets. It engulfs the 2-3 previous candles, so that is a very ugly candle for anyone holding tech stocks. What you're going to be looking for if you're trying to short the Nasdaq 100, you're going to be looking for follow through. So right now we have a green candle. It hasn't taken out this red candle, but any move above this bearish engulfing candle, any move above the body of this bearish engulfing candle would completely negate it. So you've got your stop loss right here. And so this is potentially an objective place to bet on a long-term top of tech stocks. But again, we don't have a sell signal. We have the equivalent trend line right here. So if you're looking for a long-term sell signal, you're looking for a breakdown of this trend line. If we start to come towards it, that is going to act as support. So if you're shorting Nasdaq 100 right now, you need to be aware that this trend line is going to act as support, and that we are at the very least going to get a reaction of this trend line and perhaps continue the move up. Now we are about to make a crossover on the MACD, so that would be a momentum switch to the downside, especially if we have some bigger red candles. That would be very bearish for the Nasdaq 100. And finally, we have this divergence here. This is the most worrying for the Nasdaq 100. We have RSI divergence on the weekly. We have a high here and a higher high here with a bearish engulfing candle. RSI divergence right here with 2 overbought readings. That's very bearish. So these are some very bearish technicals, but we are still in a heavy uptrend. We are still above this trend line right here, making higher highs and higher lows. So far, we are still making just a higher low. So this could be the markets just shaking out weak hands, having that correction before heading on higher. Until we have some bigger sell signals, any move down above this uptrend line right here would be a buying opportunity if you're looking to invest into some tech stocks. I know Tesla is down big, so that is a risky investment considering how volatile it is. But if you use proper stop losses and an appropriate position sizing, it can be worth your investment. Now, please do not trade based on this video. This is for educational purposes only. Do make your own research before investing or before trading. We are proud to announce that this video is sponsored by eToro. You can click the link in the description below to access their website. eToro is the world's leading social trading platform. It's trusted by millions of users from over 140 countries. You can trade and invest stocks, commodities, cryptocurrencies with its simple, intuitive, easy to use platform, which are 3 qualities we love here at Game of Trades. I hope you guys enjoyed this video. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.